It doesn't appear to be all bad news, though, when it comes to Canada's economy, particularly our banking system. A new report from the World Economic Forum finds Canada is home to the world's soundest banking system. Canada is closely followed by Sweden and Luxembourg. The collapse of some of Wall Street's biggest financial names helped push the United States way down the list to number 40. Britain, which once ranked in the top 5, has seen similar issues. It now ranks at number 44. The World Economic Forum bases its findings on the opinions of executives around the world. Joining me now is Tom Vassos, a professor at the Rotman School of Management at the University of Toronto. Thanks for joining us tonight. Good to see you again.
Hi, Marcia.
So explain, why are our banks better off than the ones in the United States?
Well, we in Canada have a fairly strong and rigorous governance process around the banking industry, legislation in place to insist on specific capitalization levels of the banks. And what that means in lay terms is really that banks have to set aside a certain amount of money in reserve to make sure that they have enough funds in case people do default on mortgages and loans and things like that. So the government monitors that, and if banks are getting too close to those limits, they'll make them act to ensure that they are really looking solidly from a financial basis.
Now, we got a pretty high score, but do you think that there's room for improvement?
Well, no, I think, keep in mind that survey was just an opinion of executives, but still the underlying structure is there. The soundness of the system is there. Just take a look at a quick comparison to the U.S. If you look at the impact of the subprime mortgage crisis, 20% of their mortgages being affected by that versus less than 2% for us. The Canadian banks having to write off $11 billion because of those bad mortgages, but the U.S. having to write off $600 billion, 50 times that amount. So when you look at it in relative terms, we're actually in really good shape.
So if things are so sound, I think a lot of people might be wondering, why aren't we getting the same interest rate cut?
Well, if you look at that, I mean, banks have to make a decision based on their cost of borrowing, and as that cost of borrowing has gone up, as the credit squeeze in the U.S. has spilled over into Canada, and they have to make the best decision not only for passing on as much of that to the people getting mortgages and loans, but also to their shareholders who they are accountable to, and making sure that they are maintaining a certain level of profitability in the market.
So what does this mean for Canadians, for consumers? They might be listening to this story thinking, well, if it's so great, what's my share in this? How do I benefit?
Right. Well, I mean, there may be some interesting short-term benefits as there's a squeeze on interest rates, and those are dropping around the world, as we know, including in Canada. We're likely to see further interest rate cuts. So we are going to see lower interest rates on our mortgages, if they're variable, for example, on new car loans that we get, things like that. And the reality is, yes, it's very painful when the markets drop so significantly in such a short time. But the reality is, if you're not selling today and you're not retiring in the next few months or whatever, and you hold out this cycle until the next upturn, then once again you will reap the benefits of the long-term appreciation in a commodity environment, which is like Canada, which tends to be heavily commodity based.
Tom Vassos, thanks so much for coming in tonight. Good to see you.
Thanks, Marcia.
Good night.
Bye now.